You're watching today's video technical update presented by FX Times. It is Tuesday, February 23rd, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. The greenback continued to gain on the majors, but the Japanese yen trumped the greenback strength today in a bout of risk aversion. We'll take a look at some new developments from the US dollar Canadian dollar and the decline in the US dollar Japanese yen and the euro yen pairs. Also, I'll follow up on the euro pound pair. This video is being produced at about 5:30 p.m. Eastern Time ahead of the Japanese trading session, or the Asian trading session. I'm skipping the euro dollar and the pound dollar pair today because there hasn't been very much development, except the dollar continues to gain slightly on both pairs, currencies. However, here in the dollar Canadian dollar pair, there's some new development that may be of interest. You see here the market has been in a sideways action here. Looking at the daily time frame, has been a sideways action since end of last year, in October last year actually, and more consolidation action really from August. So now in the 4-hour time frame, we saw a recent rally here that could be a start of a bullish cycle, and we saw that the stochastic showed here one retracement, and here's a second retracement. So this is a major retracement from this swing, and now that the stochastic is showing our momentum, bullish momentum taken over, this might be a completed second wave, and therefore a third wave may be the following wave, upswing right now. So with that in mind, looking at the daily time frame, you see here, so if this is 1, 2, our third wave, if we extend it to 100%, would be to the 1.09 area. But if it's since it's a third wave, if it's a third wave that's going to be longer than the first wave, it could go up to the 1.12 area, and conservatively to the 1.11 area, which would be the resistance zone of our consolidation that started here in August. So this is a sort of a first conservative, short-term target, and this is more of a more liberal short-term target, and that would, if the market is able to reach these areas, specifically this 161.8 area, then it's very likely that yes, indeed, we have a new bullish cycle developing. So that's something to look for in the future, in the next couple of weeks. This development in the short term, to see if it will break above this this resistance and carry over into the intermediate term. That's it for the dollar Canadian dollar. The Japanese yen was a stronger performer than the US dollar today, as you could see in this US dollar Japanese yen pair, which retraced from the 92.10 level all the way down to the 90 level. So in this swing, we have retraced 61.8% of this previous rally. Looking at the daily now, we see this was the previous rally, and then this is the retracement. So we're still in the context of consolidation, as you can see here. We've been in this declining channel, and now the market is showing some bullish, possible bullish start to a new wave. And here we have, we're still testing this converging triangle. So in the short term, it looks like there's some heavy bearish action, but it is still supported by our trend line here. So until the break of this trend line, we could still be bullish in the short term. But we, now that we're so near the apex of this triangle, it's probably a better, more prudent thing to wait for the break of this trend line to establish that bullish outlook, because it's if it does, it should be coming up very soon in this week or next couple of weeks. So unless the market goes into low volatility and drags out this ranging action, we should see some further rally in the next few sessions, and if that rally carries over and breaks over this trend line, then we are in an intermediate rally. And just to update, follow up on this, this is a reverse head and shoulder that may be developing, and that is if the market is able to break this trend line and then break the neckline here. So in the short term, at least if there's a rally, the rally should see some resistance here. After the break of this, it should see some resistance here around 94 area. Okay, and just to look at the 4-hour time frame one more time, we are at the 61.8% retracement, so look for some bottoming action, although be cautious because the previous swing was very heavy. Here's just a follow-up in the Euro-Yen pair. Yesterday we established that we had a Gartley and then a butterfly pattern completed here. So there was a lot of bearish forces here at this retracement completion, and we saw that this was a 61.8% retracement. This is a better. So now the market is declining. It broke the rising trend line and this intermediate trend line, and we are in a very bearish mode anyway, so this is a very high probability swing projection. And just to follow up, we are the market is moving that way already with very strong candlestick confirming our bearish outlook. The Euro-Pound market is showing a bearish signal here in this bearish divergence, and in the short term looks to decline towards the 0.8670 area of this previous support area, basically. And that's because we are still in consolidation. Looking at the daily, we're still in consolidation, but this failure to make new highs is confirming to our bearish outlook, which could be swing projections as such. So that would swing us to the 0.85 area, maybe even a little lower. But here in the short term, we should expect we should expect some support here above 0.8650. That is, if in the Asian session the market is able to break this previous power line, which seems to be holding for now. So look for a break in the Asian session, and if it does, this is pretty much 2 swings to the support area. Then see if it breaks. If it breaks, we have this outlook towards the 0.85 area. Alright, stochastic, by the way, here shows that's a very good sign that the market is crossing back down before reaching the overbought area. Okay, and that wraps it up for today. Visit fxtimes.com for more fundamental and technical updates as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.